Hello, everybody. Welcome to this fundamental analysis webinar this evening. My name's Troy. I'm a senior account manager with AvaTrade. I'll be leading the presentation. Before we get started, let's do a quick systems check. If you would, in the chat box, just type OK if you're hearing me clearly and seeing the screen all right. Okay, great. I've got enough responses. Thank you. Looks like we're up and running fine. If anyone has any issues with audio or anything as we go along, just type in the chat box there and I'll be on it. Okay, so a lot happening in the markets, namely the two driving stories that really have been moving the markets these past really several months, US-China trade situation and the Brexit situation, which now has turned into the election situation that maybe had results most expected, but maybe was surprising in the landslide nature of how things went there in the UK. But that whole situation has been viewed pretty positively by the markets, and we'll take a look at how that fundamental news is also affecting things. But as we get going, some things to keep in mind, as always. You should understand that any investment has its level of risk. It also holds true with Forex trading, using CFDs, spread betting, options trading, especially when you're using leverage. It can increase the level of risk if you're not careful with your risk management. So keep that in mind. And what we're covering is not meant to be financial advisement, but is coming from an educational perspective for you to hopefully add to your knowledge base and improve upon or start to build, if you're brand new to things, a trading strategy. And really, sometimes it can just be the smallest of things, learning a little bit new technique or a little bit more information that can really turn things around in terms of the P&L on your strategy, in terms of the results that you have. So what we're looking at here today with the fundamental news is potential, which is always what we talk about with trading is, no one trade is guaranteed to have profits, but we always look at what's the potential of a move and what can help you in terms of the profit potential as we look at the fundamental news and combine that with the technical analysis. And so that's what we'll be looking at as we move forward. Obviously, not every investor ends up profiting. It's trading isn't easy all the time. And you have to take a look at your strategy, your risk management, all of those things. And as you see on this slide, maybe about 30% or so of clients with AvaTrade end up long-term profiting, right? Others maybe aren't doing so bad, but slowly lose to the spread or the swaps overnight, which really are a small fee. But you've got to have a strategy that's more than just guessing, 50-50. And that's how you overcome the small spread, the small interest charges overnight, and can move into overall profits with your strategy long term. And so that's really the goal. That's what we're looking at here, is helping you get to that level, hopefully, or improve upon your strategies to move towards that level is the goal. And you can read our full risk disclosure statement on avatrade.com if you have interest in doing that as well. Now, moving forward, we're going to jump onto my demo account. We're going to look at the live movements. You can be looking at the same time. If you have two screens, you could be looking at your live account. That's okay as well. And as long as you understand things as we go over, you can make appropriate moves with what you believe from the information that we cover. What is fundamental analysis? We'll cover that real quick. Basically, that's the news, right? It's economic information, news reports, things other than the candlestick chart movements. The candlestick chart movements or the line graphs, whatever you're looking at, looking at the historical movements on charts, that's technical analysis, which we certainly will involve that this evening as we look at potential moves. But at the same time, we're going to first focus on fundamental news, which comes in a couple different forms. One would be regular economic events, which is listed here. That would be things that what the announcements are, like PMI numbers coming at a specific time for a specific country. Those are on economic schedules that you can predict what the announcement will be about, exactly when it will be, that sort of thing. The extraordinary economic events are the other type of fundamental news. And that's the stuff I alluded to as we were first starting the webinar, the US-China trade situation. We'll go over what the PMI is, Adnan. That's a good question. And some other things that came in today, okay? In short, PMI stands for Purchasing Managers Index. Okay, and so these purchasing managers for corporations and such, if you see that the prices are going up for what they're purchasing, especially if they go up more than expected, that shows positive signs for demand within the economy. If prices are rising, that tends to be bullish then for the currency if those numbers come in higher than expected. We'll take a look at that real quick as we look at what's happening today with the economic events on the regularly scheduled announcements. And then, as I was saying, the extraordinary economic events, the Brexit situation, the US-China trade situation, those things, yeah, Adnan, as in inflation, exactly. Inflationary numbers tend to drive up the indices, tend to be good for the currency, tend to be bullish. To a certain extent, right? Overinflation is not good as well, as you see with some currencies around the world. But as I'm stating about the extraordinary events, the couple we alluded to, Brexit, US-China trade situation, those in terms of timing, when a headline might come out about, hey, US and China reached a deal like it did Friday when that news came out, we had no idea exactly when that news would break, or whether it would be that it was good news or bad news, or we didn't know when news would break necessarily about polls about the Brexit situation and the UK election. So those are less predictable in scope and timing. Okay, yeah, macro events. We're talking about macro events here, Adnan. Exactly. So the regularly scheduled economic events you might think of as more micro events. And the extraordinary events many times are macro, not always, but many times they are macro events that will affect really the whole global economy, causes a big movement in lots of assets, like the US-China trade news and the UK election news. Okay, so let's take a look at some of the recent fundamental news, okay? And you'll get skilled at this, really, and time is important a lot of times for folks. If you were taking a look at this and then had to go to work, let's say you looked at this earlier today, and by the way, it looked very similar earlier today, and you could have used this quick overview to make moves already. You could already be weighing profit, and I'll show you how easy it would have been, okay? And then we'll look at potential moves going forward. When you see a headline like this, Wall Street touches fresh highs on China data, trade deal boost, and then you look here and the S&P 500 futures in the green, NASDAQ futures in the green, the Dow, S&P, NASDAQ from the last close in the green, the risk index, the S&P 500 VIX, that shows level of risk or fear. I should say fear, maybe not risk. The level of fear, the VIX index is referred to as the fear index, and it's dropping, which means fear is dropping, right? So it makes sense, right? All of these are in the green. People are buying into the riskier assets, the indices that tend to move great with good economic news, and the fear index is dropping, as you might expect when these are rising in green. What does this headline and all of this green and the fear index dropping tell you about the sentiment today? Within 2 minutes, you can look at that before you were jumping onto the charts to find entry points with your technical analysis, and you'd know which direction did you probably prefer to trade on the indices or on gold or on oil. You can tell within a short period of time. Before we look at the charts, yeah, Ebert probably trading up on the indices, right? You would have known that this morning as soon as you look and saw this on the main page. You'd know, ooh, positive momentum. Probably I'll buy into the indices. And we'll look what would have happened had you done that. Now, what about gold? Without looking at the chart, what do you think gold did today? If gold is a safe haven asset, if everybody is seeing positive momentum, the fear index is dropping, yeah, probably down. And what do you think happens to oil? Without looking at the chart, If good economic news comes in about trade, the markets are happy, what happens to oil typically? Yeah, okay. A lot of you are typing gold down, oil up, indices probably rising. Okay, so you can see what I mean about getting a feel for the sentiment with the fundamental news. It doesn't take much time. You could do this right before you're trading, right before you go in to place trades. Whether you're doing long-term trades, short-term trades, it's a good idea to look at the fundamental news and know what's happening. Understand which way is the wind blowing, so that if you're looking at technical analysis then next, and you see gold is on a resistance level, you have to stop and think, okay, based on what I just looked at, do I think gold will bounce down off the resistance, or will it break through and I should prepare a buy stop above the resistance? And based on this news, you might have a preference. That way, if there's a false signal, it breaks through the resistance temporarily, then drops, you've avoided preparing the buy stop, right? Because you felt you had a better inkling that there's positive sentiment and that gold should probably drop more than rise. So this is where you can start to improve upon avoiding false signals and getting in on the real movements by looking at the fundamental news first. And we'll take a look at gold, Adnan. We'll take a look soon. Okay, so let's look at a couple other headlines. Okay, this is an actual article, U.S. exports to China to double under phase one deal. Does that sound like a good thing for the U.S. economy? U.S. exports to China to double under phase one trade deal. They agreed upon phase one Friday. That's why gold took a shot down, like $20 in an hour. Gold dropped when the news broke that they signed the phase one trade deal. What do you think this does for U.S. indices? U.S. exports to China to double under phase one. Yeah, probably pretty good news. Double? I mean, come on. To double your exports, that's huge for the U.S. economy, for U.S. indices, etc. And obviously, what does that do with gold? At least temporarily, anyways. Help drive it down potentially, right? Okay, so what about another article? Wall Street touches fresh highs on China data trade deal boost. We looked at that. How about on another site? Let's look at Reuters. By the way, the same headlines are on Reuters, but I found another one that is different than what was on investing.com. UK's Johnson, Trump look forward to ambitious trade agreement. Sounds like they're pretty positive about things as well. Talking about an ambitious trade agreement, US and UK. Does that sound like positive sentiment or negative for the UK, for the Great Britain pound? UK's Johnson and Trump look forward to ambitious trade agreement. Sounds positive. Sounds like a lot of positive momentum right now. So before we look at the charts, you probably already have an idea. Pound maybe was strengthening. Oil probably strengthening. Gold probably dropping. Indices probably rising. Okay? We get the feel before we look. Okay? So let's look at the charts. Let's see if we can confirm some things. Okay, here's gold on the 30-minute candles. What did gold do overall today? Okay, is it down on a support level or did it rise to a resistance level? Here's the resistance, right? Old resistance from back last week. Resistance, 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 and down. Okay, here's the support level now, right? Old resistance, new support. Support predictably didn't break through the support maybe right away because it's only a phase one trade deal, right? The whole deal didn't go through. But overall, is gold up or down today? Did it do what was predictable? If you had caught it at a high point near the resistance, either here or here on any of these attempts to break, you'd be in the money. Okay? And why would you have chosen to sell from the resistance rather than buy on this little false breakthrough? And this is a perfect example. If you had a buy stop above this resistance, a pending order, you could have placed a pending order and said, okay, if it breaks that resistance, I'll buy. Boom. If you had it too close to the resistance, it would have triggered your buy and down it went. How did you, How might you know not to prepare a pending buy stop up here? Because we looked at the fundamental news and we said, the news is positive today. Positive momentum. Gold should probably drop, not rise. And so you avoid trading on this false breakthrough and you trade down from the resistance, and it's an easy profit. So now you could have still profited even if you traded on the breakthrough and it was wrong and it broke back below. You could have hit your stop loss and gotten out with a small loss, but your profit margin is much better if you avoid that false signal by knowing the fundamental news was likely going to push gold down and going with the downward movement off the resistance rather than the breakthrough move above it. Type OK if you're with me on that. The fundamental news in this example today helped you avoid the breakthrough and buying on gold and only go with the reversal off the resistance. Okay, imagine the profit margin, if the difference between only trading down here off the resistance and not being tricked by the breakthrough and buying, right? So, in this case, it went up to from 78 to 79 and a half. Let's say you hit your buy stop, you lost $1.50 on gold. Came down and hit your stop loss, you lost $1.50. If you only traded down from the resistance and had your stop loss a little wider up here, it doesn't hit your stop loss, it drops, and it dropped all the way down to this support, which would have been a likely spot where you would have taken profit. If you're scalping, it makes sense. Where's the next support level? It was right here. It was clear as this came down just a few hours ago, all the way down to 1473 and a half or so. That's like $6 profit. Let's be conservative and say you got in a little late and out a little early. $5 profit on this scalp move. That's quite a scalp. When I say scalp, it means trying to take a small profit with a quick in, quick out. Okay, that's the idea of scalping for anyone that's not sure what that means. And we see the resistance level here. We see the support level here. You choose the resistance with a down trade over the breakthrough because you saw the fundamental news. And trust me, that fundamental news existed 3, 4, 5, 6, 7, 8 hours ago. And so going back 1, 2, 3, 4 hours, it was up here on the resistance. You could have saw it and said, ooh, nice move. Technically speaking, it was a nice move because it had kind of gone sideways and consolidated below the resistance. And fundamentally, it was a good move because there was reason for gold to drop. Okay, so how much do you make? Let me just ask. If you had a one lot position on gold, how much would you have made in this hour and a half that if you got in from the resistance level and got out at the support level and you got $5 movement in gold, how much would one lot position pay you? How many ounces are in one lot? Let me show you. Gold, one lot is 100 ounces, right? 100 ounces in one lot. 100 ounces, Adnan, in one lot. So if it dropped $5 from here to here, which it did, easily you could have profited $5 movement times 100 ounces. Yeah, it's $500. Good. Several of you maybe we're math majors. No, I'm joking. So $500 in an hour and a half. That's nice, right? The leverage allows you to take nice size positions. As long as you risk manage right, it's okay, right? You can take whatever size position is right for your balance and your account and your risk management strategy and tolerance, right? So leverage allows you to have the capacity to make nice profit in a short movement. $5 movement to make 500. Wow, it's 10 to 1, right? Ratio between the movement, or 100 to 1, I'm sorry, ratio between the movement dollar-wise and the price of gold and the amount of your profit. 500 profit with $5 movement. That would be a one lot position. Now, I'm not here to tell you what size to trade, right? You have to trade for your balance size. So 0.1 would have made $50 in that short period of time, which is really nice if you have a smaller balance size. How much do you have to gain in a day to average 20% profit per month? How much do you have to gain each trading day? About 20 trading days in a month, right? So if you gain 1% on your account per day, on average, right? 2% one day, you lose 1% another day. If you can average 1% gain per day, that's 20% gain per month. You double your account in what, 6 months? Less. That is actually a nice return to average 1% per day. So when you say you could make 500 in this one little move, or make 50 in this one little move, or even $5 if you're trading micro lots in this one little move, you don't have to say, well, the smaller size trades aren't worth it. It certainly can be, based depending on your balance size, right? And so you have to look at the bigger picture and not try and necessarily double your account in one move, right? We all know that's pretty risky. You certainly can try to do that if you want, but the idea that gaining 1% of your balance on one move, some people feel, well, that's no fun. That actually 1% a day ends up a nice return after several months. Okay, so keep that in mind as well. I alluded to maybe using pending orders, like you could have had a sell limit if it reached this height right here. A sell limit, you just go to pending. Whoops, pending order, and then you pick the type. Sell limit sells from a higher point. Okay, sell limit would sell if this came back up here. You could program it to sell from a higher point, right, from the resistance again. Buy limit would buy from a lower point. So if it came down to the support from where it is now, you could program it to buy from a lower point. In this example, which would you prefer to do with the current environment? With the current environment, do you prefer to program a sell limit from here or a buy limit from here? If the news is positive for the markets, you might prefer to sell down from the resistance rather than up from the support, right? Now you have to keep an eye on the news because those headlines can change in a moment. That's why you should always check, look at the latest momentum, the latest sentiment and headlines and announcements, and then make your move as quick after knowing the most recent news as possible. Okay, in an hour, 2 hours, 3 hours, if this is back at the resistance, I wouldn't just trade down based on the news we looked at right now. I would go through the process again, look at the headlines, look at the latest news, make sure it's still in your favor to do that. Okay, right now I wouldn't be trying to trade up off the support necessarily with the positive economic news. I might be waiting, what kind of pending order would sell if it breaks the support? In that case, you're waiting to go with the positive economic news. Sell stop. Many of you already are familiar with that. A sell stop sells from a lower point. So I might prefer to sell from a lower point if it breaks the support rather than try and trade up off this support. Now that's me, right? I'm going with the current news that I just looked at. It doesn't mean you can't buy up off this support. If you feel like it's going to pop up more, you certainly could. But in the bigger picture, you'll see that you probably improve your win percentage and avoid the false bounces, in this case potentially, by going with the fundamental news paired with your technical analysis. Alex, it's no problem that you showed up late. You might be a little bit lost, but it's okay. You'll catch on, and feel free to ask questions. Okay, what do you think oil looks like if I pull the chart up? Maybe the opposite of what we're looking at on gold? Let's take a look. Up, right? Gold went down, oil went up. And a lot of times when the movements are based on economic news, that's what you see. Positive economic news, you tend to see oil go up, gold go down. It's not 100% correlation. Certainly nothing usually is, but you see the correlation many times. Gold down, oil up. Why? Because positive economic news, which allows gold to drop, tends to be good for oil demand. Positive economic news. Think about it. What does that do for oil demand if economies are doing better? Tends to drive the price of oil up. So many times, if you see gold shoot down and oil sitting on a support level, you might prefer to buy on oil rather than sell. If the movements are caused by economic news and not something like OPEC saying they're going to cut production, because that's not economic news, that's market manipulation of oil, which is something different. Sometimes when you have those types of announcements, oil and gold move the same direction, both up or both down because of artificial manipulation of oil supply, which is basically what cutting production is. To try and make up for a slowing economy, they cut oil production. Therefore, oil could be going up while gold's going up with negative economic news. You see, it can happen that way sometimes, and you have to pay attention to what's moving the market. Is it OPEC cutting productions, or is it positive economic news? In this case, oil is climbing today because of positive economic news. And so it's moving the opposite of gold, as you would expect. Okay. All right, so what's the deal with oil? What could you have done today? You easily could have been trading up on oil as it broke through resistance levels, as it bounced off support levels. We can see resistance here. Okay, there's the latest resistance. It broke. Resistance, resistance. You see it broke through here, and now it's holding as support just above it. Okay. Not as rapid of a movement as the indices, but we see oil going up. So right now with positive economic news, you might have said as this came back down right here and settled right near this support level, it tested it. As you saw it was holding, you could have said, I'll buy up. Okay, it would be off to the right direction now anyways. No guarantee it'll keep going, but it's certainly off to the right direction. What about the indices? NASDAQ. Look at that. What do you see many times after when you come out of Friday? What do we call this right here? This right here. Friday's close compared to Sunday night's open, Monday morning's open. What do we call that space? Yeah, it's a gap. Is that sign of positive or negative momentum? NASDAQ gapped up and open, positive momentum. And many times, this movement will try to fill the gap. It'll come back down some, right? And then after it refills the gap, you'll see it climb. Today, the momentum was so strong, it didn't even try to fill the gap. As soon as you saw that it consolidated and continued to rise, you could have said, okay, it's not filling the gap. The momentum's up. I'll take a shot. And you could have said, I'll put my stop loss right below where it opened. If it drops below that point, then maybe it's filling the gap. As long as it stays above its open point. If you got in anywhere here and put your stop loss below the open, look at the profit you'd have had today. Just by going with the positive momentum in the articles. Friday, we already knew there was a China-US deal. We see the gap at open. Look how easy that would be, even if you got in late. Even if you got in today, after the news broke, after the gap went up, you go with the fundamental news. Look at the power of fundamental news. Look what it does for you. How else would you know what direction to trade? You wouldn't understand why it gapped up without looking at the fundamental news. And by looking at the fundamental news, you also know that if it's not refilling the gap, there's a good bet it'll keep climbing. Yeah, Alex, if you had a trade before Friday's close, tremendous. And I'll tell you what, I have a lot of my clients in my portfolio that did that. They saw the fundamental news. They knew, wow, US-China trade deal, that's a big deal. They opened positions before the market closed Friday, guessing that Monday's open would have a gap up. And boy, did it, right? What a nice gap. And so, and then it continued to rise today. Easy move. Really was an easy move. Now, you might be saying, well, how do I know when to close my positions, right? Well, is it consolidating sideways after a rapid rise? Right now it is. It consolidated sideways. It formed a new little support level here, right? Rapid rise, support. Okay. If you're scalping, now might be a good time to take your profit if you're already in, right? Now might be a good time because it consolidated sideways. If you're more of a long-term trader, maybe you're not thinking about at all closing these yet. You might expect further rise. Okay, that's up to each individual trader. When you decide enough's enough, when you get out of your trade, how long you hold it, just understand the fundamental news can change in an instant, right? So if you've already collected a nice rise, it's consolidating sideways, you don't have to close all of it. You could say, okay, I'm going to profit take. I'm going to do a partial close. Let me give you an example. I could have one full lot open. Let me buy on it. Let's pretend I'm in the money. I'm obviously not. I just opened it. I'm down the spread. But let's pretend I'm in the money. And let's say I got in down here after the gap up. I see it's not filling the gap. I get in with my stop loss down here, just into the gap. It rises. And let's say I'm taking my profit. I might say, listen, let me modify or delete. I can change from modify order to market execution. And you see there's an option that I can close whatever amount I want. Let's say I think it might rise a little more, but let's say I'm 75% certain the rise is done for the day. If that's how I felt, I'm not saying that's true, but if I felt that way, then I would say 0.75. Let me close 75% of the one lot I have open. Since 75% of my certainty is gone that it'll keep rising, so let me close a portion of it. Whatever I set here, and I click close, you see it's telling me it's going to close that amount of my one lot position. So here I close, and now you see how much do I have left open? A quarter of a lot. Okay, so I didn't have to close the whole thing and open a new trade and pay the spread again. I can close whatever amount of the currently open position I want. Now, even if this movement goes all the way back down and hits my stop loss, I'm in overall profit because I only lost from here to here, from my entry point to my stop loss, and I only lost a quarter of a lot, whereas I profited all the way up here on 3/4 of a lot. Okay, Alex, you didn't have to close your position necessarily, but if that's how you felt, that's great. There's certainly potential for it to keep climbing. So if you wanted to do like I just showed, a partial close part of it to preserve some of your profit and leave part open, that's an option as well. Okay, so just some ideas about risk management. Some people prefer maybe to put a trailing stop, or some people prefer to partially close something, or others say the heck with it, I'll take my whole profit and close the whole thing. That's fine as well. Okay, remember, 1% profit a day gives you 20% gain in a month and doubles your account in less than 6 months. 5% profit a day, which I've seen some traders pull off on a regular basis, doubles your account in 1 month. Now that's a more aggressive style of trading, but it is possible, and you don't have to get 20% gain in one move. 1% gain, 5% gain is actually really good to do in a single move. And you see I'm moving into profit. The market's still trying to climb, even after all the climbing it did today. Let's say you closed, like Alex says he did just now. What kind of pending order could I put up here if I get confirmation that the market's still going to climb, meaning it breaks this resistance right here? If it breaks this resistance, it goes to a new high point. What kind of pending order would buy from up here, waiting for confirmation of an uptrend before getting in? Buy stop. That's it. Very simple. The use of technical analysis. Why am I thinking about maybe putting a pending buy stop up here instead of a sell stop down here? Because there's positive news on the market right now. I would prefer to take a shot with the news rather than against. Unless I check the news and I see an article just came out that said trade deal off. If some kind of bad news came out, then I might prepare a sell stop down here. Yeah, Alex, that's another option. You could move your stop loss up closer and leave it run. But there's no problem. Don't second guess what you did. You also can prepare a buy stop up here if you feel like it could keep climbing, waiting for confirmation of a breakthrough, and then you can get in again. Okay, it's up to you though. If you feel like there could be a pullback, obviously you can prepare a sell stop right down here. You could prepare a sell stop just in case there's bad news. Then you certainly could get a strong pullback. And can't you do both? Certainly you could do both. You could say, listen, I'm not Nostradamus. I don't know what the next report might be in the next hour. So you could prepare a sell stop down here below this little support that if it breaks it, you say, oh, must have been bad news that broke, and your sell stop sells with your stop loss just a little bit back above that support in case it's a false signal. And you could have your buy stop up here at the same time in case it breaks back up. So many times traders don't care to try and guess which way it's going to go. They prepare for both directions. Sell stop below the support, buy stop above the support. You run the risk of more false signals that way, but you still can profit. Even if one goes bad and the other goes right, you're maybe limiting your risk on either one, and you have larger profit potential depending on where you put your take profit on either one compared to what you're risking to your stop loss. It's one way to potentially go about things. Alex, yeah, if you're happy with the profit you had and you closed it, don't second guess yourself. Okay, so here's an interesting thing. Let's look at gold and let's pair it against palladium. And let's go to 30-minute candles and 30-minute candles. Okay, do you notice palladium's moving the opposite of gold? Right here, when gold was dropping right here, palladium was rising. Whoops. Palladium was rising. And now as gold is getting a little bit of a correction back up, palladium is correcting back down. Does anyone understand why that would be? What is palladium used largely in? When the markets are really doing well and there's positive momentum for business, why would that drive palladium price up? Palladium's a precious metal. You'd think it would be a safe haven like gold. And a lot of times people get confused. Why would one precious metal like palladium be rising? You know, palladium's referred to as white gold, right? A lot of times used along with platinum in jewelry and that sort of thing, but it's also used in industry, okay? Catalytic converters and such. So palladium, if it's expected for factories and production to do well in the economy, that increases demand for palladium. So palladium goes up with positive economic news many times, and gold, being a safe haven, would drop with positive economic news, even though they're both precious metals. Gold is not used as largely in industry. It's more of a safe haven metal compared to palladium. Okay? And palladium is actually more rare than gold, believe it or not, and platinum. So we see palladium rise when gold drops and vice versa. You don't see the effect as much with platinum. Palladium is a bit cheaper for industry to use. It's used maybe more and more compared to platinum. So palladium tends to rise more with positive economic news as gold's dropping. Okay, so what if one moves before the other? What if you watch these side by side and you see gold shoot back down to the support level here, but palladium didn't move yet in this made up scenario? What would you expect palladium to do if gold just shot back down to the support level, but palladium didn't make its move yet? That could be a leading indicator as to trade which way on palladium if gold already just shot down. Let's say we see gold shoot down to the support and palladium didn't move yet. What might that tell you to do with palladium? Especially if there's still positive economic news. If we've got the fundamental news saying positive news still, we see gold shoot down to the support, but palladium didn't rise yet, you might say, yeah, Adnan, you might say that might be a leading indicator that, hey, palladium might go back up now. Why would you think that? Well, when gold went down, palladium went up. When gold went up, palladium went down. So logic might tell you if gold shoots down, then palladium might go up, right? They're moving opposite of each other. We see it on the chart right now. Okay, it's confirmatory there that when one goes one way, the other goes the opposite many times. It's never a 100% relationship, right? But we're not about being right 100% of the time when we're trading. We're talking about being right more than we're wrong in order to profit. And, each move is with controlled risk so that we won't blow the whole account on one move, hopefully. Unless that's your style of trading. I'm not here to tell you not to do that, certainly, but maybe many times it's advisable to control your risk at a level that makes sense. Okay, so I do see gold already pulled down here. You see this wick? Down, 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 down. If you see this pull down further and further and further, and platinum still hasn't gone up yet, maybe that's an opportunity there for you. Okay? And again, why am I talking about up and not down for palladium? Because there's positive economic news. I'm looking at which way the wind is blowing. What if the opposite? What if palladium already shot up? Back up to the resistance, and gold didn't drop yet? Then the opposite, right? If palladium made the move first, you might be looking to say, ooh, that's an indicator that gold might drop because palladium went up. So sometimes one happens before the other. It's not always consistent which one's leading. But if you pay attention and you know the fundamental news is in a certain direction, and then you see one confirm what you think then the other should do, that can just give you the slight edge. Okay? It can give you a slight edge to be right that much more than you're wrong. Okay, it's called cross pairs. If you haven't heard of that, cross pairs. You're taking one pair, like gold versus the USD, and comparing that to palladium versus the USD, and finding a relationship. What if I tell you there was good news out of China on the economic, and I promised you we'd look at some other economic news. So let's look at the economic calendar. Remember I said there's two types of economic news? Let's look at what came in yesterday on the economic calendar. Good news out of China. Look at that. Industrial production up 6.2%. Retail sales up 8%. Green means better than expected. Okay, this was a high-level announcement. 3 bullheads. Better than expected. Anyone can check this announcement schedule. China always comes in late at night, early morning, so then you can trade the next day based on that. Okay, what currency does China affect the most other than the Chinese yuan? Who's the number one seller of iron ore to China? Yeah, Australian dollar. So as soon as you saw this news come in on China last night, if you would have bought on the Australian dollar, do you think you would have made money today? Let's look. Australian dollar, let's pair it against the weakening safe havens. Australian JPY. Indicators, right? Economic indicators. Look what the Australian dollar did today. These are 30-minute candles. Look at this. Up. Up. Resistance point right here. Resistance. Resistance. Look at the timing of when this broke the resistance. Right? This morning, 9:30 a.m. It started climbing back here off this support, back here when the announcement came in. Okay, so even if you weren't watching when the announcement came in and it climbed, again, what kind of pending order could you put? Because you're putting a pending order to buy if it breaks this resistance level because you saw those announcements from the night before. A buy stop. Why would I know that I want to put a buy stop above this resistance? To buy if it breaks that resistance? Simple, fundamental news. Look at the economic calendar. Positive news for China. The number one buyer of Australian iron ore and coal is China. How easy is that? How easy is that to know that I would prefer to trade on a buy stop on the breakthrough rather than trading down off of the resistance? Why would you not set up a sell limit to trade down from the resistance? Here's the resistance. How did I know not to trade down? The China news. Good China news. Why would I trade down on the Australian dollar against this resistance? Why would I do that when I know there's good news for the Australian dollar because China had better news than expected? many times. As China goes, so goes the Australian dollar. Okay. Again, fundamental news paired with technical entry points, even on a late entry. We missed the whole night of climbing after the announcement. And you get in this morning GMT time, 9:30, this breaks through and you still make all this climb. Yeah, Alex, good point. Why did I pair the Australian dollar against the yen? If the Australian dollar has a reason to climb because of good news out of China, why would the yen weaken? Why would I pair it against the yen? Like gold, the yen is a safe haven. It's referred to as a safe haven currency. Good. So strong horse against a weak horse. Makes sense, right? Why would I pair the Australian dollar against something I expect to strengthen? I'm pairing it against something I expect to weaken. I expect the safe havens to weaken with positive news out of China, plus the China trade deal we already knew was good news all the way from Friday. So you easily could have entered in on this breakthrough with a buy stop with against the yen with good reason to think the yen should weaken and the Australian should strengthen. Lots of fundamental news behind that. And look how much further it climbed even with this late entry point after a breakthrough. You don't have to get the perfect entry off this support level down here to make profit. You can wait for the confirmation on the breakthrough and look at all the profit you still could have made. It climbed another 20 pips. Another 20 pips. That's a lot. If you can make 20 pips profit a day, you're doing well, if that's your average. And on a single move, on a late entry point, on easy fundamental news, with a simple pending order to make 20 pips, nice. Okay. 20 pips is from 31 to 51, 75.31 on the breakthrough, 75.51 right now on the consolidation. With the yen, the pip is the second number after the decimal when you're trading with the yen. Other currency pairings, it's the fourth number after the decimal for the pip. Okay, we talk about pips with currencies because they move in such small numbers, currency value. And that's why you have to have like 10,000 of them or 100,000 in your position size to make a nice profit, because for any one of the currency, the pip value is very small. So that's why positions tend to have much larger numbers of the asset compared to indices or gold. Good question. All right, so I think you all see the power of the fundamental news here, because you don't have to even get in immediately after the announcements, as I showed you from last night, the China announcements, better than expected. Even if you weren't up in the middle of the night to watch that, you still could have gotten up this morning, and you saw at 9:30 a.m. GMT, this broke through. You still could have entered if you got up before work or whatever, 7 in the morning GMT time, and saw this resistance level, saw the good news on China, put your pending buy stop above the resistance and said, hey, if this momentum's strong enough to break that resistance, I'm in. Boom, it broke it, and there it went. Okay. Some of you are asking, will it keep climbing? It certainly could. The technical analysis, let's look. Do you see a resistance level that this climb stopped at? Not a major resistance. I see an old support level right here. Okay, support, breakthrough candle. Typical breakthrough candle right here off this support. Now it came up and predictably it stopped climbing right at this old support level, which now is resistance. That was predictable that might be where you take first spot where you might take profit. Could it still go up? Of course it could. There's positive momentum today, but it hit this resistance and consolidated. So the momentum has ended there. The momentum of that move ended. Where might you put a pending buy stop? Above this resistance. If it has enough momentum to break this old support level, which is now resistance, then perhaps you might want to get in on another buy stop with the next resistance level here. Right? Here's the next resistance level up here. So if it breaks the resistance, you get in. If you're scalping, you might think about getting out about here at this resistance level. Okay? It's the same game as this breakthrough. Breakthrough, resistance level, get out. Breakthrough, resistance level at the next level, get out. Eventually you'll be wrong, right? Eventually it'll break through, then reverse. Okay, so you lose a little bit when it reverses and hits your stop loss. But if you were doing this through the day, you're already weighing profits. Now you're getting in a little later now if this is your first shot at it. Doesn't mean it can't work. Okay, certainly could go. Why am I saying prepare a buy stop instead of doing a market sell right now? Because the news is still good. I don't like to trade against the news. Go with the fundamental news, but also with proper technical verification, meaning a breakthrough. That's a strategy. You don't have to abide by that strategy, but it is a concept that as we look at the history of the chart, it worked today, and it worked yesterday, and it worked a lot of days, or yesterday, I should say Friday. Okay, so no one strategy will be right every time. And if you try a breakthrough on this resistance, if it happens and you get in on a buy and it reverses and you lose, doesn't mean give up on the concept, right? Limited loss, hopefully. And in the bigger picture, if you're right, even 50% of the time, really, you could profit with this type of strategy. And really, going with the fundamental news, you should be right more than 50% of the time. If it breaks, you're saying if it breaks, it could go towards 0.6940. What asset are you talking about? Because right now we're on 75.52. I think you're looking at just the decimal numbers. Yeah, certainly. Maybe you're on Australian USD. Okay, we're on Australian JPY. That's why I'm confused. Why did I not put up Australian USD for these examples? Because the US dollar had reason to strengthen today too. US dollar had reason to strengthen along with the Australian. So I tend not to pair two strong horses against each other. There's more likely the potential for a false signal. Okay, because you have two strong horses. Now, as it has it, the Australian climbed against the USD today as well, but not as dramatically. Okay, but it did climb. So if we look at the resistance level about here, the breakthrough was about at 0.6886, and it went up to 9.1. You only had about 5 or 6 pips profit on Australian USD. Here you see the power of pairing, opportunistic pairings. Australian USD breakthrough, 5 pips profit if you were trading on that. Australian JPY breakthrough, we saw 20 pips profit on the buy stop strategy. So why did the Australian USD pay you less on the buy move than the Australian JPY? Because the yen is a safe haven and it was weakening, and the USD had the good news about China and was strengthening. So pick your pairings wisely. It makes a huge difference. And you see the example in this case, about a 200% difference in the amount of profit, even 400%, 20 pips profit compared to 5 pips, right? A huge difference, 4 times profit potential, simply by pairing Australian against JPY instead of Australian against USD. And if you understand pairing the strong horse against the weak horse, it made more sense from the beginning, Australian JPY, if you were buying on the Australian today. Okay, good. I'm glad you mentioned Australian USD, even though the movements are similar. You're right, Alex, but the profit potential was way different. Alex, if you want to diversify and you did half your move Australian USD, half your move Australian JPY, I see why you'd do that. But understand, the Australian JPY moved much better than the Australian USD if you were buying, and that was predictable because the yen had every reason today to weaken, and the USD had every reason to hold at least its strength because it had a deal with US China. The reason the Australian was strengthening is the same reason why maybe the USD wouldn't weaken so much against it. So 5 pip movement or 20 pip movement, I like the 20 pip if I'm buying on the Australian JPY in that example. What do you think happened with indices? We already saw, right? Gap up. Wait, let's go to 15-minute candles. Climbing, climbing, climbing. We saw a gap up. Let's make sure the date on that. Let's go 30-minute. No, this is the 12th. I didn't think that was right. So see here, 12th, 16th. Let's find where today started. You didn't see the gap here. 13th, 15th nighttime is here. Okay, so there's the opening of the market right in this area here. Just finding the exact date. There's the 13th. That was Friday, 13th. And there's midnight. So here's where the market opened today, right in this area right here. And you just see it went up, 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 up with the positive momentum and reached another high. You see, broke this high. And now it's on top of it as support. So this was resistance. We see it, resistance, resistance, breakthrough, support. Okay. If you want to prepare for a possible pullback here, yeah, US dollar weakened a bit. They've lowered interest rates, remember. Some of you are pointing out that even with the strong news for US China, that the US dollar weakened some. It certainly didn't weaken much today, but yeah, the US has lowered interest rates several times this year. So that's helped the US dollar stay weaker, which actually helps the stock market rise. That was the whole point of the US lowering the interest rate on the USD like it did. So you make what you will of this. Here's a support level that you could trust if you trust it. That technical analysis wise, you don't have to risk much to get below the support if you want to take a shot at a buy. You also could take a shot if it breaks the support on a sell. Okay? If you think the momentum is done today, a broken support could make a run back down. Certainly could. It could make a run to where this big breakthrough candle here was, potentially, right? Here's the big breakup candle, big rise. If it breaks this support, it certainly could run to there, right? So in this case, you don't have to try and guess the market. You could say, okay, I'll take a market buy. If it breaks the support, I'm out. If it breaks the support, I have a sell stop to get in on a sell, and I could scalp to the next support level. Something like that, okay? Just some ideas. You don't obviously need to make those exact moves, but keep in mind the fundamental news has been bullish, okay? Let that help control what you do as you see what's already happened today with the fundamental news. I think this is a good spot to stop. We've gone for about an hour. Any questions, comments before we end things? All right, everybody, you're very much welcome. Thank you for joining. All the webinars are recorded, by the way. If you go to AvaTrade's YouTube channel, if you go to YouTube and just search AvaTrade channel, you'll find it. All the webinars are now recorded. Tonight's will be uploaded by tomorrow morning sometime, and the earlier webinars, Tuesday and Wednesday, are uploaded by later that same day in the afternoon. So if you missed the live ones, they're available next morning or same day on the YouTube channel. While they're still relevant, you can still view them, okay? All right, thanks everybody for joining, and until tomorrow's webinar, good luck with your trading, okay? All right, bye for now.